Let's talk to the head of global foreign exchange research at Deutsche Bank. He has devised the bank's currency returns index, which is now used as an industry benchmark for Forex trading. He also recommended last month that investors sell the euro and buy the yen. Well, let's see if Bilal Hafeez still holds that view. Bilal, why would you say sell the euro when you believe that the euro and the eurozone is going to survive this crisis?
Well, one of the reasons why I think you'll still sell the euro, even though we believe the euro will remain intact, is that the policies that would be needed for the eurozone to remain intact are all currency negative. Whether that's additional austerity in order to establish the fiscal rules within Europe, which will have an impact on growth, that will be negative for the euro, and whether it's the ECB increasing its monetary easing through different means, whether it's cutting interest rates or increasing its bond purchases. So I think we're in the stage right now in the European crisis whereby all kind of roads lead to measures which are negative for the currency. So we maintain our bearish view on the euro against both the dollar and the yen.
How low does the euro go in 2012?
Well, I think at least we could go down towards 125. We could even go down towards 120 or so. So that will be our targets. What will end up supporting the euro in the end would be the fact that the fundamentals of the other major currencies, such as the US dollar or the pound and the other majors, are also very weak. So on the US side, we have extremely easy monetary policy. We have a current account deficit. So there's a limit to how much the euro can really weaken against another currency that has many negative currency characteristics.
I just want to come back to this idea that the euro will survive intact. What makes you so confident that European leaders are going to be able to work this out?
Well, two things. One is if you just look at the costs associated with a breakup of the euro area, even a partial one. So, for example, if one was to see Greek exit, the cost of that will be so large in terms of the systemic risk it would introduce to financial markets and the possibility of a deflationary and depressionary shock on the global system, that the alternatives of keeping the system intact would be much, much more attractive. So that's first, just a basic cost-benefit analysis. All points to the eurozone remaining intact. That's the first kind of more of a theoretical point, you could say. And in practice, if you see the evolution of the European crisis over the past year and a half, every time Europe has hit some kind of barrier or it seems like the euro crisis is escalating, European policymakers step up and move further and further towards European integration or euro area integration. So the evidence so far has been that although many people are talking about possible disintegration of the euro area, the evidence so far at least has been that when push comes to shove, the Europeans move towards integration.
But by taking so much time to come up with a solution, aren't they risking the damage being greater? I mean, Christine Lagarde saying if they don't get a handle on this soon, we could be looking at a 1930s type scenario.
Now, of course, I mean, time is of the essence, particularly over the next few months where we get an extremely large number of redemptions and rollovers for European financial institutions and sovereigns. But I would say that, many people make a parallel with the Lehman period where there was a sharp shock and then very quick action to stabilize the financial system. The difference with Europe is that Europe isn't really facing a bank crisis per se like what we saw in the US. Instead, Europe's facing a sovereign crisis. And the problem fundamentally with a sovereign crisis is that you can't just announce a set of measures and then say on the next day the problem's solved. In order to have some confidence that a sovereign crisis has been solved, one needs to see the debt to GDP ratios of countries start to stabilize and fall. And that can't be determined overnight. It takes a number of years for the markets to be able to have that visibility.
But investors are unlikely to be that patient. So what does the ECB do here? I mean, the market seems to think that it's going to bow eventually and step in as the lender of last resort. Do you agree with that?
Well, I think eventually the ECB is going to have to step up and increase its bond purchases dramatically. So in that sense, it will step up and take on that role. And that I think, will be an important step to stabilize the situation. But at the same time, what the ECB requires, in order for it not to be viewed as monetizing government debt and letting governments off the hook, what the ECB needs to see is that other countries stick to aggressive fiscal rules. And at the moment, we're playing this game of cat and mouse almost, whereby the sovereigns need to show that they'll stick to the rules, and at the same time, the ECB needs to show that it is willing to step up and stabilize the system.
Bilal, stick around for a second. I just want to take a quick look at France because it's already in recession, at least so says its official statistics office. Linzie, it says that the country's GDP is going to fall 0.2% this quarter and then by another 0.1% next quarter before it returns to growth. So President Nicolas Sarkozy is not going to be pleased with that because he's been counting on growth of more than 0.5% to meet his budget targets. And don't forget, he faced his general election in April. So, Bilal, back to the impact of all of this, of the European debt crisis. It's a hit to growth. How bad is recession going to be in Europe?
Well, it will be bad. I mean, currently our estimates are saying that, France, Italy, Spain are currently in recession. They're experiencing in Q4 negative growth. We also think Germany will enter a mild recession early next year, so it will face 2 quarters of negative growth. So for sure, there is a recession in the euro area, and it is having that impact. One does, though, need to provide some context here because the UK also we estimate is experiencing negative growth right now, as is Japan. So this is not confined to the euro area. This is a broader issue that many countries are facing. But for sure, the crisis is having an impact through a number of different channels, whether it's the credit channel or just the fiscal austerity channel.
Bilal, one of your big calls is to buy the yen. Why do you like the yen so much, considering that the Bank of Japan and the Japanese government want to do everything they can to weaken it?
Well, I think that's partly the reason why I like the yen so much, because not only does the Japanese policymakers want a weaker yen, just about every other investor has been trying to sell the yen for the past few years. I think, for me, the important thing about Japan is that it went through its crisis in the 1990s. And the currency suffered over that period, at least from the second half of the 1990s. So it had its crisis, it paid for its sins, and now we're seeing Europe and the US going through a similar, if not greater, crisis of their own. So on a relative basis, the yen just looks so much more attractive than the others. More fundamentally, if one does a kind of a head-to-head comparison between Japan and, say, Europe or Japan or the US, Japan does still have a current account surplus. Europe doesn't, neither does the US. And although interest rates are zero in Japan, as they are in the US and they're very low in Europe, in real terms, so if you adjust for inflation, Japan has positive real interest rates. So from a currency perspective, a country that has a large current account surplus and positive real interest rates, it's difficult to find many currencies in the world that have such a combination. So I think that will just force the yen to just grind high or strengthen against the other major currencies, even though policymakers will try to do what they can to stop that from happening.
So the yen's traditionally viewed as a safe haven. Where are your riskier bets going to fall in 2012? Where do you have the potential to make the biggest returns?
Well, I think 2012 will most likely be a year of 2 halves because we have a significant amount of event risk in the first part of the year revolving around Europe and also the global slowdown that we're seeing, not only in Europe but also in Asia. So that will all come to a head in the first half of 2012. Then the second half should, in theory at least, see the market stabilize. So it could well be a year of 2 halves. So it'll be tough to say whether one currency will necessarily strengthen during that entire period over this 2 halves. But at least for the first half of the year, we think the biggest winners would be the dollar and the Japanese yen. And currencies like the euro, the Swiss franc would be the worst performers.
All right, let me ask you about South American currencies, because you've got a couple of calls in that region as well.
Sure. So one of our views we do have for the next period of time is to be positive on the Mexican peso. So Mexico is a currency that's undervalued when compared to many other currencies, whether it's emerging markets or G10. It also benefits from its proximity to the U.S. So when the U.S. economy is doing well, Mexico generally benefits from that. And right now, if you look at the major regions of the world, Europe, U.S., Japan, U.S. is the one part of the world that is growth-wise at least, doing the best, and so Mexico should benefit from that. We don't think the central bank will cut rates that aggressively. And on top of that, Mexico to some extent benefits from elevated oil prices, which we are, of course, seeing at the moment. So we think Mexican peso is probably one that will benefit from the type of environment that we're in.
Okay. I want to just break in, Bilal, and look at India for a moment. Its central bank has stepped into the market today, sending the rupee rebounding from a record low. This is how it's trading at the moment. It's up 1.5%. After starting the day higher at about 2% higher. Now, the Reserve Bank tightened rules to curb the speculation that's made the rupee Asia's worst performing currency this year. So policymakers have been busy in India, Bilal. A lot going on. You have the currency down 17%. You've got the main stock market down 23%. You've got this political deadlock over whether to allow more foreign investment, for example, in the retail space, letting people like Walmart in. Where does the rupee head in 2012? Some are suggesting it could see some pretty major gains.
Well, I think when one looks at the macro picture, it looks quite negative for India, at least for the next few quarters or so. So I think India, the rupee will remain weak, at least for the first half of 2012. If anything, the risk is that dollar India goes to new highs, so we go towards 55, maybe 57 or so. The issue for India is that it does suffer from a negative global risk environment. So amongst the Asian currencies, in some ways India is the odd man out because it's a country that doesn't have a current account surplus, has a large deficit. It's inflationary prone, has a budget deficit. And so it's unlike many other Asian currencies. In fact, there's not many Asian currencies that have those features like India.
Well,
so instead, India compares more...
It's also got this situation where they've had 7 interest rate hikes, yet the currency is falling. How do you explain that?
Yeah, I mean, the hikes were... You have to look at the backdrop to why the hikes were occurring. So inflation went to extremely high levels, higher than the central bank's target, and the central bank was initially behind the curve trying to catch up by hiking those rates. And inflation only recently has started to peak out, but it's occurred at a time now where the global backdrop has deteriorated significantly. And so, in essence, they had an inflation problem, they hiked too late, and by hiking too late, it's tipped the Indian economy over. So the timing of the hikes have been such that it's turned out to be quite negative for the currency.
Bilal, finally, give me 3 currencies you're buying in 2012. We can say the first half if you prefer. 3 currencies you're selling.
Sure. The currencies we'll be buying will be the dollar, the Japanese yen, and the Canadian dollar. The ones that would be selling would be the euro, the Swiss franc, and would also sell the Hungarian forint.
All right. Bilal Hafeez, Deutsche Bank's head of foreign exchange strategy, coming to us from Singapore. Thanks so much for being with us.